we're seeing a nice bounce back in stock prices today. Do you see this just as a bit of a relief rally after the sell-off we've seen over the past week or two?
Definitely. I think that there was very aggressive selling last week. We saw the market plunging. We saw Anglo-American and the big miners like Billiton as well really coming under pressure last week as people took money out of emerging markets. And I think with the American market closed yesterday, it's allowed people a day off and just to take a look and a view of exactly what's happened and what's happening in the growth story in China around the world. And I think people coming back, buying a little bit of stock and picking up some really good bargains.
Well, just taking a look back at some of the data we have seen out over the past week. We had those PMI numbers out last week, disappointing from China, barely above their break-even level. Our own PMI negative. We had the ISM in the US, also a little bit disappointing. And of course, those jobless numbers towards the end of last week, also not very great. So, Rob, is there a concern in the market that we are headed for a double-dip recession and we could see a further pullback in equity prices?
Definitely. I think that the unemployment number is really the big one, and we're just not creating any jobs around the world, and you can't really have a recovery without employment. So I think there is a possibility of a double-dip recession, and people are watching this very closely. I think that as the government starts to pull some of those funding out and some of those stimulus packages, we are going to have these little dips. But what we have to see is it going to be a trend going forward, and is it just going to be a dip and then good numbers coming back, or is it going to be continually weaker numbers going forward? And if it is, then the possibility of a double dip recession gets stronger and stronger.
But we've also seen some commodity prices improving over the past couple of days, like copper. It was up yesterday, up again today, but of course this is a metal that's down 12% on the year. Nevertheless, those commodity prices coming back and helping to support our mining stocks in particular.
Yes, I think also with the mining tax problems that they had in Australia last week, those miners and all the commodities again were sold off a bit aggressively, probably oversold. People coming back into the markets after just digesting all of that information and looking that they are really relatively good prices. There still is demand coming from China, even though it is slightly weaker, and really good coal exports coming out of South Africa as well into that Asian sector of the economy. So people coming back, buying up some of the coal, buying some of the commodity prices again, and good money to be made and traded at these levels.
Well, with people buying coal, as you say, particularly coming in from China and India, do you find it strange that Anglo-American announced yesterday that it was selling its Australian coal assets?
They are selling some of their assets, I think $3.6 billion worth of assets. I think they are new mines and deposits of mines of coal assets and not actual mines that are currently functioning. I think they've got a very big project down in Queensland which they are keeping in the coal side. But I think they say it's not anything to do with the tax in Australia, but maybe it did push them a little bit to say, well, let's not develop something that's a brand new project. So yes, quite not surprising. They have sold quite a lot of Tonga, Tulet, they have Tarmac, and they're getting out of some of their assets that are non-core assets to them. And they've got very big coal deposits in South Africa, and that very big one in Queensland. So 3.6 billion coming in, just propping up that balance sheet, and very good for Anglo-American.
Of course, that 3.6 billion must be helping its cash position as it moves forward from here. And of course, investors will want to know if this company is going to be paying a dividend when it reports back later this year. What's your view? Do you think they're starting to gather cash for that dividend?
I think so. I think there could be a token dividend. I don't think it's going to be a very big dividend back to the dividend yield that it has had in the past, but I think it will be the start of dividends again for Anglo-American.
Well, just taking a look at some of the resources stocks, we've got Anglo-American trading just above 270 Rand at the moment, BHP Billiton just around the 200 Rand mark. Do you think this is a buying opportunity for investors given the pullback we've seen in these stocks this year?
It depends where you're coming from as an investor. If you're fully uninvested and you don't have anything in the markets at the moment, and you're sitting just in cash, I think it's a very good level to start picking up some stock. If you've been sitting with Anglos from 330, obviously it's it's totally different for you. But I think that these levels do show good value. If you take a look at the highs that we saw a few years ago, Anglos at 550 Rand, Billiton near 400 Rand. These are really good levels, and I think that even if the recovery is slightly slower this year, it's not a bad level to start entering into the market.
Well, one stock that moved up very nicely yesterday, I think it was up about 4%. It's up another 1% today. That was Naspers, trading around 265 Rand. Of course, this is a share that took quite a hammering earlier this month on concern about Chinese regulations. Is that all behind it now, do you think?
I think, yes, I do think so. I think that the earnings were relatively good, but below expectations. And I think people are very, so some of the institutions are very fully invested in Naspers, and were waiting for, it was their growth stock that they kept in their portfolio as a kicker. And when those results came out, they weren't as expected. There was a big dumping of that stock. I think that Naspers was definitely oversold. The target prices have moved from the 400s all the way back down to about 350, but trading at around the 250 level, it still gives you good upside. And I think that they were slightly oversold. We'll probably see them around the 270 level quite soon.
Retailers lagging today. We had Pick n Pay, one of the only stocks down this morning among the top 40. Other retailers also not doing very well. But retailers have done particularly well over the past year, haven't they?
Yes, they have. They've had a very good run on the retail side. In difficult and trying conditions, they've still produced really good revenue. And I think they're fully priced at the moment. If you take a look at some of the other sectors like general mining, the PEs are, for some of the big miners, are below 10 PE, forward PEs. If you take a look at some of the retailers, they're back at 13 and 14, some of them at 15 and 16. So I think they're fully priced now, and I think you'll probably step out of some of these retailers and move into some more growth areas, maybe some of the general miners again.
Of course, SAB Miller's also proved quite defensive. It's up about 1.33% today, trading around 216 rands. And of course, we have that World Cup at the moment. So I'm sure they'll be hoping that lots of those fan parks this evening for that Dutch-Uruguay match are drinking SAB Miller beer.
Yes, definitely. I think it'll give them a little bit of a kicker on their South African sales. But they are very defensive. Their structure is very good. They're in all of the right markets around the world, all the growth markets. Any pullbacks in South African breweries during these dips is definitely worth buying.